It finally happened. The long-awaited event most of us were waiting for, US presidential elections, are finally decided and behind us. And since markets like certainty, we've seen a major rally since, lifting us beyond previous all-time highs. Not only in the stock market, but also in other risk assets like Bitcoin. Today we'll discuss how the new presidency could impact us as passive global ETF investors, both in the short and long run. To do that, we'll once again take a look at some historical data without making any of it political. I'll of course also show you how my own investment portfolio performed until today, November 6th, and discuss any changes in my investing strategy. Let's start things off by reviewing how the stock market did last month, looking at a global ETF covering the FTSE World Index. After rising as much as 3.9% by October 18th, our ETF ultimately finished the month at plus 0.65%. As a result, its year-to-date performance is now sitting at a remarkable plus 17.9%. And here's where the ETF portfolio I share with my wife currently stands in actual numbers. As of November 6th, we're up 19.3% or 64,500 euros since the start of 2024, with our total return since we started buying ETFs now exceeding 120,000 euros. Our average yearly return since we started investing in 2017 currently stands at 11.79% per year. By the way, you can find the best low-cost brokers in Europe for ETFs linked down below in the description, which is a great way to support me if you'd like to. Now, in case you're wondering about the reason why markets pushed 2.8% higher just today, presidential elections in the US are finally over. And surprisingly, Trump was able to win the race by a significant margin. Look, I have no interest in getting political here, it really doesn't matter which side you're on. The fact that it was a clear win instead of a close call is good for us as investors though, because it means the outcome is not going to be contested by the opposing party, which is something that could have dragged on for weeks and months, impacting the market negatively. And since markets like certainty and are forward-looking, it's great that we finally have this out of the way. In case you're wondering if a Republican or Democratic president tends to be better for US stock market returns, historically speaking, it hasn't made a significant difference. In fact, any differences may have been due to random chance, irrespective of the president at the time. Having said that, the market may still be reacting positively to the Trump win due to his plans to deregulate, lower taxes for businesses, and because the US Congress seems to have a Republican majority as well. That in turn means he faces fewer obstacles in implementing his plans. Now you might be asking yourself why I'm even mentioning any of this. After all, I'm based in Europe myself, just like most of you watching. To put it simply, that's because US stocks have performed exceptionally well over the past 10 plus years, bringing them to a current share of 72% in the MSCI World and 62% in FTSE World ETFs, which is how a lot of you watching, me included, like to invest. As a result, the performance of the US stock market still significantly impacts our returns as global investors as well. Speaking of that, I recently recorded a video comparing the S&P 500 and its historical returns to the MSCI World, MSCI All Country World and FTSE World. So make sure you check that out afterwards if you haven't seen it yet. As for high yield savings accounts for our Euro cash reserves, my wife and I are still using Trade Republic since in my opinion they're the only trustworthy broker/bank that's still passing on the ECB interest rate of currently 3.25% to its users one-to-one without taking a cut for themselves. In October, we earned a total of 97 euros in interest on our cash reserves here, which are still secured by a bank deposit guarantee. And we once again made an extra 15 euro via the 1% Saveback we get by using the Trade Republic card for all of our expenses as a family. You can find the link to Trade Republic below if you'd like to check them out for yourself and support me in the process. This brings me to the most controversial one of my investments, Bitcoin. As usual, I first need to point out that this one is highly speculative and not for everyone. It has performed extremely well for my wife and I since 2017, but it still carries a lot of risk, and I believe it should only make up a small percentage of your overall portfolio, no more than 10% if you decide to include it at all. Okay, now let's see how it performed recently. After a strong month of October, Bitcoin pushed even higher and broke its previous all-time high as soon as it became clear that Trump was going to win the presidency. With a year-to-date return of close to 80%, it's my best performing investment this year by far. I'm really curious to see how Bitcoin is going to move until the end of the year, now that it finally broke its previous all-time high from back in March. Its returns following previous elections have been very promising. At the same time, there's of course no guarantee that's going to happen again, which is why I believe anyone going for speculative investments like this should limit them to a small percentage of their overall portfolio. Let's finish things off with our investment strategy in November. Our core investment remains the same. Around 90% of our monthly savings are going into a single low-cost ETF, the Invesco FTSE World, no matter what is going on at the time. The remaining 10% are going into Bitcoin as a personal high-risk bet of mine, which I'm aiming to rebalance at the end of the year with the rest of my portfolio, so that we're not taking on too much risk overall. By the way, my goal with these monthly updates is to keep you informed, so that you know what's going on and what may be impacting your investment returns at the time. In my opinion, none of these sorts of events should influence your investment decisions though, all of which should be long-term oriented, especially when we're talking about ETFs covering the stock market. But even when it comes to speculative assets like Bitcoin, as much as people like to treat it as pure speculation, you should still expect to hold it for at least 4 years, in line with the length of its usual cycles so far. At least that's what worked well historically. Alright, before I take off, don't forget to gently tap the like button if you enjoyed the video and to subscribe if you haven't yet. If you'd like to support me, feel free to use my links in the description below to the best local brokers in Europe for ETFs and other financial tools I use. None of what I talked about today was of course meant as investment advice. I'm just openly sharing my personal opinion based on my own experience as an investor. Thank you guys so much for watching, have a wonderful day, and until next time.